So apparently home prices have risen 100 times faster than what is usual or normal. Let's debunk that right now. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Hope you're all doing well. It is what? It's the 4th of October today. I haven't done a video for like 19 days or something like that. So it's, I guess, the longest time it's been since I've done a video, in between videos for a couple of years for sure. So first of all, hope everyone's doing well. I've been extremely busy. Things are changing in our local market here, and therefore I'm out in the field a lot more, marketing a lot more, doing a lot of things out there because things are changing. That's what we're going to talk about today. So let's get into it right now. But first of all, this video is brought to you by our friends at Foreclosure.com. If you want to know about the distressed property listings in your area, in your neck of the woods, go to GetHousingData.com. That's GetHousingData.com. You can check out things like tax deed sales, pre-foreclosures, code violations, people who are selling for sale by owner, foreclosure auctions, the whole bit. A lot of stuff is in there, and it gives you a great opportunity to see what's happening, which is kind of what I'm focusing on right now. All right, so let's talk about this. And last video I put this up saying that the housing crash has already begun. I'm going to talk a bit about that as well in this video. So this caught my eye. So here's an article out of Market Watch. It says home prices have risen 100 times faster than usual during the COVID-19 pandemic. So of course, there will be the segment of people who will go, okay, I don't believe there's a housing bubble for all these reasons. Well, let's figure out what this guy's talking about and sort of figure out the article here. So ultimately, we all know that house prices are rising at a record pace right now, but few realize just how far from normal this is. So over the past year, nominal U.S. home prices are up nearly 20% on average and about 15% in real terms. That's a pretty good jump for a year. Most of the time, home prices barely keep up with inflation, and the return after inflation is what really counts, which does make a lot of sense. So he's basically taking a look at, this article is going on, if you look for the entire 20th century, they're looking at price points from 1955 to 1998, and it says home prices increased just 1.1 percentage point per year over the inflation rate when you're taking a look at that sort of period of time. Well, guess what? And then we hit the 2000s where things became a little crazier, right? Over shorter periods, home prices have become extremely volatile for sure. As anyone who remembers the great housing bubble of 2000s will recall, from 98 to 2006 when the house prices peaked, nominal house prices more than doubled on average after factoring the loss in purchasing power due to inflation. Real prices rose at an annual rate of 6.9%. So that was a pretty good clip there. Obviously, it's greater than the 0.1%. So certainly there's a big increase in that short period of time. Homeowners lost more of those gains over the next 6 years as real home prices fell at a 7.1% annual rate. So, we were given and it was taken away. So that's what happened in the last housing crisis, which I get. But realize that, pretty much from 55 to 98, when you actually look at home price increases in valuation, it was quite the linear increase over the period of time. Now we're into something that shows a little more exponential. So since 2012, home prices have been on a tear, especially in the 18 months since the coronavirus upended the economy. So from February 2012 to February 2020, the real rate of return was 4.3% per year. Since the virus hit, inflation-adjusted home prices are up 11.8% annualized, which means real house prices have been rising at about 100 times faster than they did from 55 to 98 when things were just, I guess you would call that normal, right? So this is not sustainable. Over time, home prices can't grow much faster than household incomes, while the housing bust to come won't follow the 2006-2012 playbook exactly. It will come at some point. Price appreciation will revert to the mean. So this is kind of what we're looking at here. So, and again, I'm not going to debate this. I mean, you can pick which side you're on. For me, I usually go with hardcore behind the scene information facts that's not apparent or maybe readily available or talked about with the mainstream media. That's kind of what I look to. I also look at defaults. I listen to what other investors are saying, And I sort of go from that perspective. This is unsustainable. And if you take a look at where we are value-wise, I mean, it's very clear wages have not kept up with home price appreciation. And that's a fact. Even though there has been wage increases, the rate of increasing of home prices has outpaced wage. So it's becoming more and more unaffordable for homeowners. How do we know that? We can look at the numbers, but truly it comes down to home buyer sentiment. Now, I'm not going to put the slide up because I've shown it pretty much every video over the past few time videos I've put out there, but home buyer sentiment, which is really, it's a, I guess an analysis and a survey taken by the University of Michigan, is at all-time lows. And the reason being because people are stressing out over buying homes with respect to bidding wars and multiple contracts and having to react quickly and over-purchase and overpay and stretch themselves thin. Ultimately, in the end, it's difficult to purchase a home right now, and it's because it's unaffordable, and therefore that's being reflected in home buyer sentiment. So the people that are out there feel it's unaffordable, but the sort of dichotomy here is the fact that we're still seeing fairly robust home sales over it. Now, the data obviously we're having right now is we're having some Case-Shiller stuff from July, some Realtor.com stuff from from National Association of Realtors from August. So we're not seeing the data from, I guess you could say when the official summer selling season is over. But I can tell you on like a real time basis, we are seeing more inventory hit the market. We're seeing more reduction in prices. We're seeing homes on market longer. We're seeing less bidding wars. And we are also seeing an increase in distressed properties, and that's what I want to get to in a second here. But realize that you've got various authors now that have saying this not sustainable. Here's the scoop. I've never deviated from day one speaking about the housing bubble, and we got to package things appropriately here. Is there a bubble? Yeah. So that's not really, I guess you could say, an argument point anymore. I mean, it's pretty much a bubble's here. We're unaffordable. It's just out of control. Simple as that. Most people tend to agree with that. I guess where we don't know exactly how it's going to play out is what happens to the bubble. Does it burst? Do we have a market crash? Do we have a subtle shift? What's going to happen? That's the 4D chess game that we have to play. We're playing chess against the government, against the lenders, and against the Fed, against Wall Street. Okay, so this is what's going on right now. So it really is about market manipulation, maneuverability, trying to find the good deals and trying to sort of work your way through all the interference that's out there. That's what happens in this market, and it's not that easy. So having said that, hey, look at we're at the 100 times the normal rate. Well, let's talk about Case-Shiller that came out at the last Tuesday of September. So really, index reports a record high 19.7% annual home price gain in July. Just for those of you who don't realize, Case-Shiller is usually about a 2-month lag time based on the calculations and how they do it. They work on what's called sales pairs. So that's what they're kind of looking at. So their values are typically posted a couple of months after them. So thus it's really end of September when we're seeing the July numbers here. So ultimately in the end, 9.7 annual gain, up from 18.7 the previous month, and everybody's gaining. Obviously, Phoenix, San Diego, and Seattle were the sort of locations that led the way with year-over-year price appreciation. So ultimately, the fourth consecutive month in which the growth rate of housing prices set a record. So basically, every month is a record right now. Okay, so values keep jumping up. It's just out of control. Obviously, we got the Fed with the low interest rates fueling all this. And by the way, too, I believe interest rates have gone up a bit. So we'll see how that affects the market as it goes forward. So I guess you could say the 14 month of accelerating prices with a 19.7% gain from year over year. Ultimately, in the end, we have previously suggested that the strength of the U.S. housing market is being driven in part by reaction to the COVID pandemic. As potential buyers move from urban area apartments to suburban homes, the demand and surge may simply represent an acceleration of purchases that would have occurred anyway over the next several years. So there's where we go. So again, look at the numbers here. So Phoenix led the way with San Diego and Seattle. We'll go into detail in a second here. But just, by the way, if you're not already a subscriber, a little quick break here. If you could help my channel grow and smash that subscribe button, I'd really appreciate that. And for those of you who are subscribers, please verify, because I've lost a lot via just something weird stuff going on with my channel. So please verify your subscription. Again, I appreciate your patronage and you doing that right now. All right, let's go at this right now. So here we see the Case-Shiller indices. There's 3 indices. There's a national index, a 20-city composite, and a 10-city composite. So we can see where the 2006, I guess you say, first housing bubble was. You can see where things were at. Then it dipped to a low point in 2012, and now we have surpassed the 2006 bubble a while ago, and you can see that the lines are starting to trend more on an upward, higher angle as opposed to slowly to more linear. So it's more exponential, exponential, I guess you could say, increases that we're seeing right now. How much are we increasing? Well, the top line there on the national level index, we are 43.7% from the peak. So ultimately, the 2006 peak was X, and now we are 43.7% higher than the 2006 peak. So there you go. When you take a look at where we are from the trough, 98% now on a national level from the trough. So the trough was, peak was in July 2006. The trough was in February 2012. So here's the scoop. If you were purchasing property close to the February 2012 trough area, you probably made the best decision of your life at that point in time, because you've gained almost 100% of value from that time on an average level. Surely various locations will have up and down, plus minuses from that 98%. But put it this way, you're doing pretty good across the board if you bought in that time. So that's ridiculous, right? I was thinking 20%, 25% is too much. Now we're 43.7% above 2006 peak, which is I don't know, unheard of as far as I'm concerned. Let's take a look at the numbers now. Atlanta up 18.5%, Boston 18.7%, Charlotte 20.9%, Chicago 13.3%, Cleveland 16.2%, Dallas 23.7%, Denver 21.3%, Detroit gives it to you at 16.1%, Vegas 22.4%, LA 19.1%, Miami up at 22.2%. Okay, what do we got here? We got Minneapolis only at 14.5%. Wow, that's not too good. Still double digits, right? New York 17.8%. Phoenix leads the top 20 index at 32.4%. Portland at 19.5%. San Diego is next at 27.8%. San Fran 22%. Seattle 25.5% in third. Tampa, where I'm located, at 24.4%. And Washington at 15.8%. So this is what we're seeing with the CoreLogic information. Do a lot of analysis and reading it, and there are some people who really think that these indices are not really worth their weight in water as well. So it's funny, as when we start delving deeper into the analysis of the house price values and their growth, etc. Lots of comparisons are being made. I just came from an event seminar last week where obviously the comparisons on house price appreciation versus consumer price index, which is based on rental rates, not not really. I guess I don't know how I can put it. Just doesn't seem to make sense. The calculations we've looked at it against oil, against diamonds, against gold, against other commodities, rice and other things that are out there. So it's interesting to see, comparative speaking, where we are. And so the consensus is that we're up for sure with respect to values, and it is sort of bubbling. That's what I've been hearing and listening to from a lot of people other than myself that talk about the housing bubble issue. So I guess the question is, what's going to happen next? Well, those are some pretty big numbers. Well, as I mentioned, the shift has already started. It started July 31st. And what happened July 31st? Well, very straightforward. We had the foreclosure moratorium ended. And what does that mean for us? That means that lenders can now start to process their foreclosures, which directly means that people who had their foreclosure auctions that were, I guess you could say, canceled, they're going to be reset. We've seen that happen now. People that were in the foreclosure process, they're going to start their process up where they left off, and they're going to move towards the end as well, too, getting auction dates set. People who were just ready to start, well, now guess what? The filings are going to start as well, too, if it's available. So we're going to start seeing these little mini waves of stuff. Will we have, everyone talks about the foreclosure tsunami. I don't know about that. I think it's going to happen in waves. It's going to slowly build up here. And we're looking at this occurring over, starting kind of now to about 2025, 2026. That's kind of where we're at with respect to the marketplace. Now, from my personal perspective, I've seen a lot more foreclosures get scheduled for the auction, and I've seen foreclosures increases on initial filings as well, too. So that's in our market down here, and I look at other locations in Florida, so we're going to see that. Depends on where you live and what's happening in your local market. But, the South, again, if you're a judicial type state, kind of like where we are in Florida here. I mean, the courts aren't holding back, and they want to get things moving forward, and they're careful of what they're going to do. They want to make sure that they're doing this appropriately and correctly, and they're also making sure that they can handle the volume. So it's a lot of stuff's going on behind the scenes, but really, when I say it started, like it really has. And as a consequence of that, obviously, we're ramping up. I'm doing mailer campaigns. I'm starting a call campaign, the whole bit. So we're trying to pick this up right now because now is the time. Now, as I mentioned, I was actually at a real estate event a couple days this last week, and it was very important because number one, it was locally here and where I live, which was good. Number two, this isn't just people who just are casual real estate people. These are real estate investors and maybe also other people involved in the real estate business. Not retail and not real estate agents per se. These are truly investors, people who are moving lots of property, fix and flip, wholesaling, flipping, note buying, probates, whatever. Okay, so and all the sort of I guess you could say supporting and adjunct businesses that can roll off that. So everyone I spoke with is like, yep, we're gearing up, we're preparing, we want to talk to you about it, blah, blah, blah. So I can tell you that nobody here was saying, oh, the housing crash is a myth, it's bull, it's not going to happen. And why I want to state that is not because I want you to think that I know what I'm talking about. It's because this is what other people are saying, all right? They are positioning themselves for some sort of shift. Now, as I mentioned, the real gamemanship here is how we're going to predict how it shifts out and what we're going to do to work around that. But I want to make sure everybody understands everyone is getting ready for this, all right? So we can still listen to mainstream media and we can hear, it's this going up and whatever. And listen, I look at the comments some people put in there, and it's like, you've been talking about the same thing, the bubble's never going to happen, blah, blah, blah. Well, as I'm mentioning now, it's not necessarily a bubble issue anymore. There's more at stake here, and that's what I've been kind of subtly sort of insinuating over the past little while, is that it's not, we're not going to see bang and everything drop 50%. It's going to be managed and manipulated as best as possible by the powers that be. We have to figure out how to maneuver within that. Simple as that. And what I am convinced of, and I'm not the only one, and as a matter of fact, there's a lot of people at this event and people I talk to, this is the wealth transfer now. All right. So, when you take a look at what's happening on the government level, at the federal level, at the state level, their interest in, and even local, I guess, certain, cities, counties, their real estate boards, or their landlord tenants groups, etc. They're taking a real big interest in real estate. Real estate's a commodity now. Okay, so you have that going on. You've got levels of government. You've got the Fed, who are trying to manipulate and manage the marketplace, still buying mortgage-backed securities. Are they going to taper rates? Who knows what's going to happen? But we have to be aware of what their situation is, seeing what's going to happen with Fannie and Freddie as they come out of conservatorship, how that's going to roll out. Wall Street. What I mean by Wall Street is the fact that it's the money people, Wall Street and the hedge funds. Okay, now so they're buying and buying, and they're going to buy more. And it boils down to what's going to be available for us, the retail people, or some of the smaller investors, after it all kind of sort of hashes out here. So we have a lot on the go. So it's policy, it's Wall Street, it's hedge funds, it's the governments. It's the Fed. Like there's so much happening, and it is confusing, and I get that. But really, that's what the whole game is. We have to be aware of what's happening in the marketplace from multiple levels, not just looking at price points and going, yeah, we're in a housing bubble, or no, I don't believe it's a bubble. It's going to keep going up. Better buy your house now. All right, simple as that. So as I mentioned, everyone's getting ready. Just a quick blurb here. Here's some updates here. So this is, looking at some of the August information here. You got, 91K in equity, between short sale medians and regular median single families in Jacksonville, which is pretty good. It's got a couple here to show you. You got almost $200,000 in the Northport, Sarasota, Bradenton area of equity there. And then you have in the Miami area, of course. What are we going to show? We got about 200K there. So my point is, when these things start to manifest and play out, we're going to see some more fun and games. I've already been picking up a couple short sales through some channel partners, and so it's happening. As I said, we've started marketing now. And why I say started, the fact of the matter is that it didn't make sense to market before. Why? Because people who were facing foreclosure didn't have to do anything or worry about it because the moratoriums are there and a lot of lenders weren't pursuing things. Well, now that that's over, so think this, it's over end of July, attorneys get involved now, they refile, and then they get back into the process, then sale dates get set. So it's typically, it's about a 60-day, process, 45, 60 days. So we're seeing that work being done, and now we're looking at auctions being set down the road. So I can see the increase in that. So it just depends on where you live, and so therefore stuff will start to happen. I look at it going, we want to be in the forefront. We want to catch this wave and run it as best as we can. That is the whole game plan here. Knowing that there's going to be pushback, there will always be pushback from the players. As well, forbearance. So forbearance is happening right now. What do we have with the forbearance world is we actually have, I guess you could say, the forbearance plans that are ending. So according to Black Knight Financial, there's about 1.2 million people who are in forbearance programs that are ending from August until the end of the year. That's their numbers. So number one, I think numbers are a little bit conservative. I think there's more than that. But these are programs that's like you've been in forbearance and you're expiring and you're done. Now you have to figure out what to do with your home. Okay, mainstream media, talking points, whatever, there's going to be a couple things. Number one, lenders will have all these programs available for people and they're not going to have any problems. Well, I don't know about that. Again, going back to what happened in the last housing crisis, some of the issues here, it's not as simple as just pointing and clicking and saying yes to stuff. A little more metrics involved in getting loan modifications and things like that. So that's more, we'll call it more effort, more involvement. Whether that works for everybody, we'll see. It typically doesn't work for the masses. It's very select people actually go through it. What we saw the last housing crisis, a lot of people who did loan modifications a high percentage end up re-defaulting and falling back in the situation they were in before, which is unfortunate. Now we also have the groups that say, hey, there's enough equity here because we're at the highest level of equity. Look at we just talked Case-Shiller home price values are up at another record high, so therefore our equity is up. So why would you be facing foreclosure? Why wouldn't you sell your home and pocket your equity and move on? Well, that's a good question, and that's what's happening right now. So if people are going to auction as they are, why aren't they doing that? Well, either they don't have the equity they think they have because the equity's been chipped away, or they're waiting too long because they think that, my government or my lender or someone's going to swoop in and help me solve this problem. I'm not going to have to worry about it. So unfortunately, a lot of these homes that are scheduled for foreclosure auction end up going to auction, which basically to me is a sad state. That's an opportunity that someone could have, done a short sale or done some sort of deal to either get money in their pocket, save their, their credit, settle the debt, not have a foreclosure in their record, not be exposed, and then someone's grabbing a new home. So there's a lot of positive things that can happen if people engage prior to the sale date. Okay, so that's the scoop. So I want to let you guys know that's what's happening. I'm going to get back more involved now with the videos because I've got stuff set up now. So we're looking at tons of deals. We're talking to lots of people, and I'm looking forward to the next little bit here. So engage. So if you want to engage, obviously drop me a line. Here, I'm going to be moving stuff forward as fast as I possibly can with deals and everything now because it's time, all right? The shift has started, as I said, it started July 31st. No ifs, ands, or buts. So if you want to know how to engage the distressed housing market, just connect with me. But, again, looking to sell, I'd sell now, at least down here if I were you. I'm looking to buy. Things starting to open up. Might be a good time to re-engage on buying. Obviously, the investment side is something to look forward to and to contact me on, et cetera, et cetera. So, guys, look forward to hearing from people. Thank you for the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please help my channel grow and subscribe. And we'll try to get back into some more regular video content. Thank you very much. We'll look forward to speaking with you later in the week.